Hey guys, Jason here for ChartGuys, taking a look at the coronavirus tickers. In one of my most recent videos, I had said that the coronavirus upside potential is really going to be directly correlated to the amount of fear in the market that is related to coronavirus. Meaning, if the coronavirus stays steady and perhaps doesn't increase or decrease in its impact on the global market, the overall value of these corona-related names is going to decrease, because as we get used to things, we fear them less. It's called creeping normality, and really, something as terrible as the coronavirus and its impact on the world and the lives of the people who encounter it, eventually it will stop being something that we fear and simply become something that we accept. And for that reason, the value of our coronavirus names will simply fade over time, even if the coronavirus doesn't. Now, what that means is that when we see a massive uptick in the fear around that virus, that like we have seen this weekend, that's when we see massive correlations to the upside for these names. The S&P, as represented by SPY, we see a massive drop today, still holding weekly higher lows, but a huge range and a huge loss of overall value in the market. Now, when we go look at our tickers, we'll start with APT, we can see that we have the complete opposite. We have a gap up, and it's because that fear that is driving the market down looks at APT and says this is a ticker that's going to go up because everyone's afraid of coronavirus, and because of that we see a gap up open and relative strength today. So that is why we are seeing a lot of volume and interest in these names, and I expect this to continue until that fear starts to subside. Now, it will subside either through normality, where we are no longer concerned as much about countries having breakouts, in which case we'll see a slow slide to the downside, or let's say we see what's the word I'm looking for? A vaccine come out tomorrow. If we see a vaccine come out tomorrow that is free and is given out and shows total eradication, these tickers are going to drop right back down to where they were, and it's going to be like this thing never happened. So keep an eye on the fear, watch the sentiment, and that is going to be driving a lot of these names. So with that said, let's take a look at APT. APT had a big volume day today, one of the highest volume days we've seen since the original spike on January 21st. We have resistance at 786, and we're going to be looking for RSI-based opportunities for entry. Because we don't have any resistance other than 786, that is the reason we're going to be focusing on RSI. Because of that complete lack of resistance, all we can really look for is for the bulls to be taking a break. They'll sprint, they'll rest, they'll sprint, they'll rest, and it's those pullbacks that give us the opportunity for entry. So we'll take a look at that. Daily resistance today is going to be important as we head into tomorrow, assuming we open inside this range, 740 resistance, and then we have daily support down here at 614. If we go to the 4-hour time frame, here's a nice little 4-hour uptrend. We see that little bit of volatility today, and looking on the hourly time frame, still maintaining hourly higher lows. So what the bulls need to do now is defend the 627. We are looking for good hourly correlation, or I should say wow, I'm really out of words. What is that magical word? Consolidation. There it goes. Not correlation, consolidation. Looking for hourly consolidation. We need an hourly higher low over 627, and it looks like we have an important area of resistance right here near this double top at 735. And if we go right there, 740, 735, very clear level for us to be worrying about here as we approach on the hourly time frame. Best case scenario, we see a stair-step action where we set higher lows and maintain area of resistance and form a big, beautiful ascending triangle, knocking out that wall, whatever that magic, big, ugly ask is up here that we see acting as resistance at $7.40 and $7.35. So that is what I would be looking for tomorrow. If we lose hourly higher lows, we can expect 4-hour consolidation. We have a 4-hour support right now at $6.12. If we lose that, then we're going to be looking for lower highs and lower lows, possibly developing a new 4-hour downtrend. LAKE, big gap up and a lot more weakness than we have seen on APT. We're going to be looking for the same areas. We're going to be looking for the high, 628, to act as resistance. We're also going to be looking at this area of 1550 and the high of 1540. So 10-cent spread there. That is going to be a zone of resistance for us, almost certainly, because it came into effect twice. On the daily time frame, we also have today's high day resistance, and then we're going to be looking for an explanation for this big red day. Is this a counter trend? Because we're certainly going to be overbought. And what sort of trend are we looking at? Is it something useful for us that is indicative of more upside, or is this going to be a little bit of a pullback with bearish momentum? The fact that we have this big lower wick here suggests that bears are not as in control as they would like to be. We'll take a look. On the 4-hour time frame, we are looking at a 4-hour bear flag at this point. There's a big run up, big sell off, and a little bit of a counter trend. It really comes down to, do we see an execution here? If this is not a typical bear flag because we have that run up, and then I'm only focusing on the 4-hour candlestick and these two tiny little candlesticks. Not the most ideal bear flag. And it's possible, very possible, that we simply move right back up to 1550 and see if we can't develop a little bit of ascending triangle, something similar to what we speculated on APT. But what do we have for us? We've got 4-hour higher lows at 14 psychological support. On the hourly time frame, we are trying to carve out a hourly trend change. We do have an hourly higher low. We haven't really moved away from it with much confidence at this point, but we do have support at $14.50. And then we'd be looking for resistance in the area of 1520. So the best case scenario for us would be to open tomorrow in this range, come down, find support at 1425. If we lose that, not the end of the world. 14 psychological is a must hold level for us, though. If we lose 14 psychological, we're going to be heading far back down here and looking for a bounce, possibly against our EMA 12 or EMA 26. It's going to be largely indicated by RSI levels. 1550 resist. If we break that, 1628 is next on deck. CODX. This is a much more impressive move today. We broke to new highs, and overall CODX has been the stronger name. I don't like the amount of profit taking that we're seeing, but who can blame the bulls for wanting to get out if they manage to ride from open or even the dip here to a perfect touch of our EMA 12? I certainly would be selling at the high, or at least trying to. So let's look at today's action. Resist at 1440. We also will take a look to see if there was any resistance at $4.24. We've got low of day support, and below that we also have EMA 12, which should be very close to 270, which is our last daily higher low. On the 4-hour time frame, we are in a 4-hour uptrend. Bulls need to consolidate and establish a higher low over 1316. If they can keep that trend going, they will be okay for a retest of $4.40. Hourly time frame, this is pretty good for a bull flag. I don't like the upper wick here, but again, we can't really complain about profit taking going into the end of the day. What is interesting is how much of this volume was in the last minute. So we'll get more of a read on that as we move in here. But right now, this is an hourly bull flag and hourly inside bars. If we open in this range tomorrow, I would expect more upside. If we knocked out pre-market lows, then that changes my tune a little bit. But so far, looks like we have good upside potential. Bulls have certainly proven their intent. We'll see what sort of profit taking took place. And I'm going to do that by checking out the 15-minute, actually just a 5-minute time frame. So I'm not sure if this was news driven. Based on that action and the fact that we gapped on the 5-minute time frame, I would suspect that is. But there is that sell-off and the cause of that big upper wick. Bulls holding relatively well, still managing to maintain 5-minute higher lows, so I'm still optimistic for tomorrow. Certainly interested to see what caused this action. This is a very strange 5-minute gap. You don't often see that, especially when something is not that prone to gapping on the 5-minute time frame. Okay. That's what liquidity and a float count will do for you. VIR in the daily time frame, another strong day. It looks like earnings are coming up on the 25th, so that is tomorrow. I think CODX had earnings too, did it not? See when those are on the 25th, so that could derail a lot of what we're looking at. But it would take some pretty harsh news to change what is driving these tickers. It's not that people are interested in investing in VIR or LAKE or APT. It's all fear, and there's a lot of traders riding this action. So keep that in mind as we deal with earnings. But I never really play earnings, so that's that. We have $20.86 as resistance. We also have today's high of day, and bulls have support to count on at $7 and $17.03, and finally $16.09. If we go to the 4-hour time frame, we are looking at a attempted trend to change. It's going to look better on the hourly, and there it is, a break over 1726, higher low, and now bulls need to break back over top of 2023 to lock that trend change in. If they can break 2023 and 2086, they're going to be in good shape for a new high somewhere. Let's call it 22 psychological. That seems like a pretty happy place for us to pull back from for tomorrow. It's a psychological number. It's going to take a lot of work for bulls to get there. and it just seems like a happy place to make a speculation. NVAX on the daily time frame, we still open strong, an indecision candlestick and represented by a spinning top, so it's not really indicative of much direction either way. It really comes down to pre-market levels and who shows the first sign of strength. When you get a pre-market level and you have a high and a low, if bulls can break that high early on, that really shows interest in knocking out that first area of resistance. Right now we are looking for support at $7.93 and $8.50. Last daily high or low, possibly locked in at 763, but more confidently we would say 732 is the support level for us. On the 4-hour time frame, we are in a overall 4-hour uptrend, hopefully setting a higher low at 793, and on the hourly, we were at pre-market run up to 920. So a lot of intent here. There was a lot of interest on relatively low volume. So that is the danger of pre-market. Someone bought up 6,000 shares, and they really overpaid for a lot of those. We see a big drop as the market reassesses its position, and it's trying to decide if it agrees with the $9 NVAX, and certainly it didn't. We're back in the 824s, trying to stabilize, trying to establish some sort of trend, and on the 15-minute time frame, we finally broke to new highs at 825. So let's see what we do tomorrow. I'll be watching the 825 range and 793, see if we open in there. Whichever one falls first, I would start to lean into that direction a little bit and look for follow-through. Lack of follow-through, of course, is very important and is indicative of strength in the other direction. Last ticker, INO on the daily, looking to have established a daily higher low here. This is the most trend-like out of them, with our low or high, higher low, high, higher low, and now possibly going for a new high. In order to do that, bulls need to break 455. We see a little bit of weakness today, so I would not be terribly surprised to see a test of 357 looking for a double bottom tomorrow. If the overall market stabilizes and we see a slight decline in our coronavirus stocks, that seems like a reasonable expectation. We would look for the loss of 383 for that. If we lose 383, then we're going to be looking for that daily consolidation to roll into effect. On the hourly time frame, ever so slight 15-minute uptrend, and we are looking right now for hourly lower highs underneath, let's call it 420. If we see a high underneath that level, then we'll be looking for a retest, and the loss of our hourly higher lows will be indicative of 4-hour consolidation, and then we need a high over 383. That is it for today. I hope you have a better perspective on what's happening and how you can utilize the market turmoil and the overall fear that drives most tickers down, but the tickers that result and thrive on that fear are going to see upside potential. So again, it really comes down to how much fear can we get and how long does that fear stay in our culture system and in the media before it becomes normal. Once it becomes normal, it's no less of a threat to human life, but it is certainly going to stop influencing the upside of these coronavirus related names.